Good day, traders. Stacey Burke from Stacey Burke Trading. Today, just going over again the 1 hour charts, demonstrating the Monday range expansions, and just staying on side with the EMA or looking for breakouts, and just reviewing again some of the simple things we talk about. You know, I've said this in a few videos, and again, just reinforcing that, you know, trading itself isn't hard. But executing the trading plan that you have is where the difficulty lies, and that's, you know, obviously working on your own demons, your own hesitations and fears, your frustrations, all the stuff day in and day out that causes you to make little mistakes and to, you know, miss out on trades, or to chase trades, or to average into losers, or to take too much leverage, or move your stops, or not use any stops at all. But again, one of the things I talk about, I get a lot of great feedback from people, and I get a lot of negative feedback from a very few people. But just to reinforce that, you know, what I'm going over is just stuff that I've learned from other people, some of the greats in the past, some of the courses I've taken from some of the other traders I've sat down with and been able to get to know. But you know, I talk about Peter Brandt's work. If you haven't followed Peter, follow him. You will learn the day in and day out challenges that traders face. And I think the big things are to get yourself in the mindset of capital management, limiting your downside on any one particular trade, being able to cut your losses short, staying in the game, and focusing on a very simple, duplicatable strategy that has an asymmetrical risk-reward opportunity. So let's go. Just taking a look at the Mexican peso now. You know, I talk about range expansions. So, you know, just looking as the week starts to progress, and looking at how, if you took Monday's high and low, actually I'll reverse that. So the high of Monday and the low of Monday, once this market breaks out, and you know, obviously there's been a breakout here on Wednesday into the London Open that changed sides of the EMA in that first 3 hours. So we know that again between 2 and 5 a.m. New York time, that the market will often set a high or a low for the day or for that session. And as we can see, the market worked its way into a possibly what you could call a short squeeze, or a falling triangle, whatever you want to call it. But we did see a breakout in London. It gave a 1 bar pullback into the US Open that again tested the high of Monday. But as we headed into Thursday, the market clearly had into the US close, had broken out above Monday's high, formed a rectangle, and then broke out again in London's opening second open of the hour. But the point that I want to make is that this second leg up, where it expanded and traded, is a full extension of Monday's range. So again, just some simple things. Traders looking for simple patterns. So again, this was a bit choppy. It's back and forth. Heading into Wednesday, we then see the market take conviction, but traders who stayed on side of the EMA. Now, I know a lot of traders don't like to look at indicators or anything else. I'm not basing my trade decisions on that, but I'm looking for some evidence of support or resistance, and you'll see this on the hourly charts over and over. Study your Monday to Friday patterns, study the highs and lows, understand the range expansions. That range expansion, once you're in this trade, you can give yourself an idea, again, of where the market might be heading to. So if you were to position yourself somewhere in here on Thursday morning, you can take, you know, the opening range, whatever it is, but you've roughly got a 1 hour stop somewhere in here of where you can position yourself, and you've got an asymmetrical target. So you're looking at about a 200 pip range there, and roughly let's say 35 to 50 pips is your risk, but you're looking at maybe 3.5 to 1 return. So these are the types of trades you want to look for. So looking at the pound, we see something very similar. We see, we'll just clear that up. So again, the red line is Monday's open, but if we look at the low of Monday, I'll get this set up. And the high of Monday, again, you can see that the market did a full extension of that range. Okay, this 200, that's a full extension from the breakout. So again, if there's a strong breakout, it doesn't pull back until after it's extended past 1.5 times the range. It's pulled back into Thursday's open. And again, not a perfect EMA squeeze, but coiled inside of the EMA. It gives traders in that first 6 to 8 hours a chance to position themselves, and you can even identify a 1-bar stop, or you can position yourself with the low of the high period, however you want to do it. But again, full extension of Monday's range. So, EMA squeeze, again, once we've hit that full extension, you would be looking at this and see that it's already found support twice. And again, traders were trapped short, were stopped out probably. The market has run both sides, and at this point we don't see any conviction, but as it's looking now, there may be possibly another run of the lows. So again, the Japanese yen, we see Monday's trading range consolidates into Tuesday. Looks like what possibly could be building a rectangle or an EMA squeeze. It breaks out into Wednesday's opening session, retests the lows of Tuesday, but we see a clear breakout in the U.S. Just prior to U.S. Open on the Wednesday. The market then breaks out, and a very strong breakout. So again, we've seen that now do two full extensions of Monday's range, and at this point this market is still trending. So again, just using some simple highs and lows, and if you don't fully understand this, go and read Dalton's book, Market Profile. But once you've got the week has started, we've got some evidence of price action taking place, we've got multiple time frame traders entering into the market, but when these moves break out strongly like this, they usually involve longer term money and larger pools of money. And this is an opportunity, again, you can see where on a clean breakout you've got a 1-bar stop, and so this market now has possibly returned 4 or 5 times the risk of that candle. Pound Aussie, we'll just clear this again. So, great example of an EMA squeeze rectangle after a strong breakout. You call it a bear flag, whatever you want to call it, a pennant, a rectangle, doesn't matter to me, that's a squeeze pattern. But again, you can see that the market didn't quite get to a full extension of that range. Pretty close, but then it reversed into Wednesday's close in the U.S. session. Tuesday's close. Wednesday found support and then broke out strongly again in that U.S. session. So Thursday traders come along, and the first thing that it will often do is trade to the other side of the profile of the range once it's across 50%, but traders would want to be positioning themselves on the side of that EMA at some point where they get an opportunity to re-enter into that trend. So again, we've seen that market pull back now, and we see some coiling happening under that EMA. We'll have to watch London's Open to see how that price action plays out. So again, just reviewing range expansions from Monday, staying on side with the EMA. We'll do it the other way. And just looking at some squeeze patterns. Actually, go back the other way here. So if we put a high and a low on Monday and we're looking at range expansions, again, we can see the pound yen formed a similar pattern. Squeeze, rectangle, flag, whatever you want to call that. Broke out in Tuesday's session, coiled in again and squeezed into the EMA, broke out to new lows, which is actually a measured move of the Tuesday coiling pattern. So again, if we break that out, not exact, but it's pretty close, 1.5 extension, and then in the US session it broke out very strongly. So again, this is an example of where you can draw your highs and lows. And you can see that as the market started to trade on Thursday, traders now see, again, a a squeeze into the EMA. It broke out into the US session. They could position themselves again. You know, this is just an example of where when the market is showing strength, you want to be positioning your side always on the side of those strong breakouts. So the market here was showing strength to the downside. That was strongly reversed. The market was finding support inside of the highs of that first breakout candle. And again, staying on side of that EMA, that market's still trending now. So test this out for yourself. Euro, same thing. We see the market has auctioned off from Monday and done a full range expansion from Monday. Actually, we'll stick with the original high. So these wide breakouts I'll often ignore and just stick. We had a bit of a version of a double top there, but we see that it's done almost a full extension, then broke out strongly on Thursday, and again into the US session. This market has formed a bit of a flag pattern, but also if we go and look at the end of day, if you've been looking at the end of day at all, you'll notice that from the January open of January, we see that market has now been finding support on the first opening couple days of January, and so we possibly may be seeing the January effect play out, where this could indeed be the low of the year. The next few weeks will obviously show us if this market is going to turn and hit a target from Monday's high. So far we see that this market is finding support in this area, and indeed we could be seeing that euro start to turn around. So if we looked at this on a longer time frame, we'll even go to the monthly chart, we can see that that euro chart has touched around that 106 level. This is the third time. So indeed we'll be looking to see how that euro plays out, if it's going to break down or if we're going to see that euro form a range and then possibly break out and give us a range expansion. So looking for these asymmetrical risk reward opportunities, and again, follow Peter Brandt's work, looking at just opportunities to where you can manage your downside and limit your risk, or manage your risk and position yourself possibly in line for these larger moves. So hopefully you got some value out of today's video, traders. Just go back, look at your Monday range expansions, look at your EMA, look for these squeezes, look for these simple rectangles, just the different indications of where you might be able to spot an opportunity to position yourself with a strong drive and manage your downside. Have a great trading week, and may the markets go with you. Hi traders, it's Stacey Burke from Stacey Burke Trading. If you haven't done so, please head over to my website at staceyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.